It might sound weird from a channel that actually talks about investing, but I'm actually really tired of investing. You see, over the last 3 years, I have learned and tried a lot in investing. However, following the news, looking up companies, checking earnings report, trying different platforms, looking up different ETFs, seeing on YouTube that there is some kind of new big thing or new strategy every single week, it's been really difficult. And so this is my game plan. I actually decided that I want to be as passive of investor as I can and automate basically everything. I don't want to be worrying about what's happening with economy. I don't want to be tracking inflation. I don't want to be reading news in order to base my investments of what is happening in the world. Because since I started right before the pandemic hit, my investing strategy was like up and down in the last couple of years, so much with so much happening that it's difficult to actually track everything. So the goal is to minimize my personal investment and choose strategy that I can trust works in a long term, in the next 10, 20, 30 years. However, before I talk about my strategy, I do actually want to show you my current portfolio because it's a complete mess, to be honest. Like, look at this. I have 1, 2, 3, 4, 5, 6, 7, 8, 9 different areas or funds or whatever I invest in. It's getting out of control. I mean, I don't regret doing it because I wanted to experiment, I want to try a lot of things, and this allowed me to learn a lot. But at this point, I'm actually doing too many things. On Revolut, I have a stock portfolio. This is actually insurance and not actually an investment type of thing, but I do get like a certain like interest kind of by default. So I'm still kind of accumulating something, but so I just want to have it here. This is basically 2 index funds combined from like an investment broker or whatever. This is an interactive brokers platform where I do have 1 ETF that I invest in. This is a bank's stock portfolio for like a kind of a pension fund type of thing. Lightyear is another investing app that I do have, like 1 dividend ETF that I have some money in. eToro is basically just S&P 500 ETF. I do have some crypto here, and this is kind of a government funded pension type of thing that I also have here. And so as you can see, there's a lot of different things across a lot of different like platforms. And even if we take a look at like the numbers, nothing is kind of, Revolut is still like the biggest one with like 28% of the portfolio, but then we have like eToro 14%, interactive brokers 22%, pension fund 10%. It's, I don't know, for me, I wasn't happy with the way kind of things are. That's why I'm trying to change it. What I'm trying to do is to restructure my portfolio in a way that I only have 4 different places or 4 different kind of categories that I invest in based on different percentages that each takes in my portfolio. And to start with, I want my portfolio to actually have 50% in just 1 single ETF. More on this a bit later. Then I want to have 20% in my bank's pension fund. I also want to have 20% on eToro on S&P 500, and then the last 10% can be kind of spread out to other things like crypto and other brokers and sort of experimental things and stuff like that. Because right now, as you saw in the pie chart, it's kind of, everything is kind of equal per se. Everything is between like 10 to 20%, something like that. I want this to be shifted to just few key things. And so the ETF that I've chosen is VWCE, which is Vanguard's FTSE All World Accumulating ETF. My reason for choosing this is that it is a most diversified ETF which I was able to find, which is still earning quite a bit in terms of interest. However, it is diversified across many different countries and areas. I mean, let's just take a look at it. For example, its expense ratio is okay. It's not the lowest one, but it's fine. It's not the biggest one either. Then if we take a look, if we scroll down here, we take a look at exposure. So what does it actually consist of? Of course, one of the biggest things are the like Apple, Microsoft, Amazon, like Google and all of that, the biggest companies out there. However, United States only accounts for 56%. So we do have like Japan, United Kingdom, China, and then like other countries like Switzerland, France, Canada. So it is a bit more diversified portfolio. I don't want to have everything on just United States. I want to have some other exposure to some other countries. And the same with sectors. This ETF has technology sector, which I do love, but it's only 21%. We do have like financials, 14%. We do have healthcare, consumer discretionary, industrial, energy. Basically, this ETF is very diversified, and in a way I don't really need, because it actually invests in everything kind of. I don't really need to track what's happening day to day, because overall markets do grow over time. Over long periods of time, we do see positive returns. So by investing into everything, I am actually giving up few percentages of profits that I could earn if I kind of try to do this manually. But in this way, I'm not gonna have any type of headache, or I won't need to track anything. It's just buy this ETF, set a certain amount, increase it every year by a certain percentage whenever sort of your salary or your income increases, and just leave it like that for like 10 to 20 years. You'll have a very large portfolio. Yes, you might be missing a couple of percentages, because this type of ETF, because it's so diversified, it is probably going to return maybe a bit less than, for example, just S&P 500 or some other sort of very technology focused ETFs. And one more thing I want to mention about this ETF is that it is accumulating. So I don't want to be paid out dividends. I want those dividends to be reinvested for me. It makes just the whole process a lot easier without me needing to just reinvest those dividends manually. So this is also another thing that I wanted to automate as much as possible, so I wouldn't need to do a lot. And one more important thing about the strategy, I also wanted to choose a provider, a platform that I can trust actually exists in like 20 years. With these new platforms like Revolut, Lightyear, or eToro, or just a bunch of other companies, they're very recent and they're very new. So I do love them, they're very easy to use, but I'm not sure what's gonna happen in 10 to 20 years. Are they still gonna be around? Am I still gonna be able to access my money and stuff? So I wanted to find a platform that is very stable. It's been in the investment world for a long time, and actually Interactive Brokers is one of these companies. It's available in Europe. It has one of the lowest like fees for trading and stuff like that, and it's a very, very safe institution backed by tons of like government stuff. Because I'm choosing a long-term strategy, because I'm automating a lot of things, one thing I also don't want to worry about is the platform. And whenever I read some news about Revolut, Lightyear, eToro, or something like that, I don't want to be reading headings of Revolut startup is in trouble, or eToro is like doing something weird or whatever. I'm still kind of trusting these platforms and I'm still putting my money, but the majority of my portfolio, 50% and more, I want to be on one platform in one ETF, diversified across many sectors. And by the way, do you remember the Google Sheet I showed you where I tracked all of my investments? I actually do have a separate video right here where I showcase and allow you to download this template for yourself and showcase how to use it. But that's it for me. Ciao.